And for the final time this week, we'll do 55 minutes of business right here on Business Incorporated. You're welcome. I'm Ini John Mekwa. Here's what we have prepared for you for the next 55 minutes. It's almost 1 year since President Bola Tinubu took over office. We'll be looking at some of the policies and the impacts. And then we'll go all the way to Paris, where the Viva Tech Conference is going on, closing tomorrow. What are some of the conversations going on there? And for the first time, IMF is talking about that new Zimbabwe currency, the ZiG, and they're applauding the adoption. And before we get into business, well, a new development. This started yesterday, and well, it's the breaking news, and it's surrounding all the platforms in Nigeria, and that is about Muhammadu Sanusi II. He's been reinstalled as the Emir of Kano. He received his appointment letter from Governor Abba Yusuf at a ceremony at the Kano State Government House today, and this comes 4 years after he was dethroned by former governor of Kano State, Mr. Ganduje. And we know it's the Kano State House of Assembly. They started this process a couple of days ago, repealed the state emir's law. That was on Thursday, thereby abolishing the 5 emirates and changes introduced by law under former governor Ganduje. The reinstalled Emir of Kano, Muhammadu Sanusi II. He served as the governor of Central Bank, and from 2009 to 2014, he started his banking career as a merchant banker in 1985, took a break, joined the United Bank for Africa, and we know that he is one very vocal leader, whether he's in the commercial or the business, financial sector space, or he's in the traditional. So we'll see what happens in the coming days. Now let's get into business. Oil prices were stable on Friday as investors considered the latest comment from the United States Federal Reserve on interest rates amid sticky inflation, while signs of firming seasonal U.S. fuel demand lent support. Brent crude futures rose 2 cents at $81.38 a barrel, while U.S. West Texas Intermediate crude futures went down about a cent. That's $76.86. Both benchmarks settled at multi-month lows on Thursday, with Brent crude futures closing at their weakest point since January, and U.S. crude futures hitting a 3-month low. Brent futures were headed for a weekly decline of more than 3%, while WTI futures were poised for a slide of nearly 4% from last week, as ongoing macroeconomic constraints in the United States held prices in balance. Some officials say that they would be willing to hike borrowing costs again if inflation surged. However, Fed Chair Jerome Powell and other policymakers have said that they feel further rate hikes are unlikely. Meanwhile, strengthening U.S. gasoline demand was helping to stabilize prices ahead of the Memorial Day holiday weekend, which starts this weekend. It is considered to be the start of U.S. summer driving season. Global metals now prices, gold prices that is, hit a 2-week low on Friday, said for their biggest weekly loss in nearly 8 months, as interest rate cut expectations started to dwindle after hawkish tone in the United States Federal Reserve minutes. Spot gold listless as unchanged at $2,330.19 per ounce after hitting its lowest since May 9 earlier. Bullion hit a record high of $2,449.89 on Monday, but has fallen about 5% since then. U.S. gold futures eased 0.3% at $2,330.80. Traders' bets indicate rising skepticism that the Fed will lower rates for more than once this year, 2024. The gold-silver ratio has now dropped, so momentum trends might switch off to favor gold again. Other metals now, spot silver rose 0.4% to $30.21. Platinum edged 0.1% higher at $1,019.90. Palladium gained 0.3% to $971.80. All three metals were headed for weekly losses. Well, let's come to Nigeria now. See that in a major move towards universal energy access, Nigeria's Rural Electrification Agency and the Small and Medium Enterprises Development Agency of Nigeria, SMEDAN, have signed a memorandum of understanding. And this partnership is to provide micro, small, and medium enterprises, that's the MSMEs, with reliable and sustainable alternative energy solutions. The collaboration aligns with REA's goal of driving socio-economic development in underserved areas through clean energy. With rising fuel prices, this partnership is supposed to help MSMEs reduce energy costs, boost efficiency, and promote environmental sustainability.
We designed a program within REA that is called Energizing Economies, which we want to embed a large chunk of energizing small and medium enterprises in it. The Energizing Economies is a program specifically focusing on energizing markets. And we have done a pilot of markets that we have mentioned, Sabonkari, Araria, Shura market, and we want to scale that up. We have now done a number of feasibility studies for a number of markets that we want to now start energizing. It is our belief that this project is a bankable project, that we don't have to intervene by providing capital subsidy.
Well, the Rural Electrification Agency has been busy these days. It's not just about signing the MOUs. I guess it's about implementation of those agreements to bring power to small businesses and households. Now, earlier today, the Group Managing Director of Holding McCaw, Dr. Edward Akinlade, was a guest. And he rated the Tinubu-led administration. He gave them 30%. 1 year into that administration. Dr. Akinlade, who oversees companies in the real estate and hospitality sectors, believes that inconsistency in policies and unfriendly operating environments are major negatives for this government.
Real estate is the driver of many economy worldwide. We have seen what Mrs. Thatcher did in the UK. Now, hotel industry, people will always come for business, especially we are focused more in Lagos. We are seeing increase in occupancy, but our cost is being squeezed. Let me give you one example. One of our hotels in GRA, we recently got a bill from Ikeja Disco. Last month, the bill was 1.5 million. This month is 5.5 million. Who pays that? Who does that? So therefore, our room rate has to go up. So our customer will be sweating. Also, it will affect our business. So on that aspect, very tough, very, very tough. On the real estate, construction, prices are going up, rents are going up. Why? Cement prices is up, FX is up, because most of the thing we use, we have to import it. Inflation is not helping. Interest rates now, close to what? Close to 27, means that we can't borrow. If we borrow, the business is non-performing from day one. Interest rates in Nigeria, I believe, should be in single digit. We need to pressurize our bank to move interest rate down. Probably the CBN. But I know what they will say. It's inflation that is making our interest rate high in Nigeria. But on the positive, I believe this is a short-time pain.
Well, conversations that will be going on, especially into next week when we will have May 29th. Even though it's not a public holiday, we do know that assessing the government's efforts and results 1 year after will top the conversation. And one of those assessments comes in the GDP. We have numbers from the first quarter of 2024 for the country, and we see that the GDP grew by 2.98% year on year, according to the NBS, in real terms for the first quarter, and this is higher than the 2.31% recorded in the first quarter of 2023, but lower than what we had in the fourth quarter, the last quarter of 2023, which was 3.46%. So the GDP for Nigeria first quarter 2024 is out, and it's 2.98%. The performance of this has driven by services sector, which had a 4.32% contribution. And then we have agriculture. It grew by 0.18% from a negative in the previous sector, the previous quarter. And the growth of industry was 2.19%. That's an improvement, also 0.31% improvement compared to the former one. So we're going to have more conversations on this. Good enough. We have with us the Chief Executive Officer of Center for Promotion of Private Enterprises, Dr. Muda Yusuf, joining us right now. Dr. Yusuf, I think you came at the right time when we just had the GDP numbers. Yeah. And I'm sure that will also speak to the rating of the first year of President Tinubu in office.
Yes, it will. But the thing is that when you compare the tempo of economic activities in the last quarter, it's normally much higher than what you have in the first quarter. Because in the first quarter, I mean, we are talking of January, February, people are still settling down, they are looking at things, they are looking at how the budget will pan out and things like that. So there's a lot of elements of wait and see in the first quarter, which was, probably what has resulted in this lowering of this slight marginal reduction in the GDP growth rate.
So the fact that it's lower, the first quarter's number is lower than the last quarter of last year. It shouldn't. It's a norm.
No, it's not. It's not something that we should worry about so much. And the degree, the differential is also not so significant. We are talking about 2.98.
Yes.
To 3.46.
Yes.
It's not that significant. And if you look at the key economic variables, even in the first quarter, you see that we experienced some positives.
Yes, we did. I think services went from negative to positive.
Yes.
And
manufacturing too, I think.
Yes. Agriculture actually. Agriculture grew by 0.18% from a negative of 0.90% recorded as year on year. So, I mean, we have that. And then we have an improvement also in industry.
Industry, yeah.
Yes. So, it looks like the rate hikes are not pinching so much.
No, well, you could say that, you see, there are a lot of factors actually impacting productivity and growth. While some of those factors may not be so good, some factors were actually very positive. I mean, if you take the exchange rate situation, for instance, it was much better in the first quarter. At least we saw an improvement in the rates. We can't compare what we had in the first half of this administration. I'm talking of first 6 months of the administration to what we are having in the second 6 months. The first 6 months was very turbulent because it was a period of major policy changes, major policy transitions. So the shocks of those policy transitions were quite profound. We are all witnesses to what happened around the fuel prices. We all witnessed what happened around the foreign exchange. These were two major reforms which took place.
I mean, that reminds me, there's a question I asked a guest during Business Morning.
Yeah.
And I asked that if the president did not make that pronouncement on May 29, 2023, to say subsidy is gone, do you think things would have been different in the country?
No, not necessarily. For that kind of pronouncement, there is no perfect time for it. We have tried it over the years. Each time we are tempted to make the pronouncement to precede the implementation with consultation, it has not worked. So, my understanding of what the president said was not that the implementation should start immediately, but the whole thing was taken out of context. He said there was no provision in the budget and therefore subsidy is gone. But it was taken as if it was a directive that you should go and remove subsidy. And that took a life of its own.
But
it was difficult to reverse.
No, but the thing now is, subsidy is still not gone, is it?
No, it's still not completely gone. And, you have to also be politically expedient with some of these policies. You cannot implement it 100% as the IMF want you to do. Given the kind of impact that those reforms have had on the citizens, it is not politically or socially expedient to proceed to continue to remove the entire thing. Because what has happened was that at the time it was removed, the situation with some of those variables that were driving prices were different. Inflation, the exchange rate, the crude oil price, those variables have moved. And once those variables move, it affects the landing cost. But because the administration is also sensitive to the feelings of the people and all of that, it has to pause the review and concentrate on seeing how we can see some improvement in domestic refining of petroleum products. And we are beginning to see that development now is beginning to impact, at least on the price of diesel, on the price of aviation fuel. And I was excited listening to Alhaji Aliko Dangote speaking confidently that by June, there will be no need to import PMS again into the country.
We pray, Dr. Yusuf, because I had one of their directors here, and they did tell us May. Now, May is coming to an end. So, since it's coming from the big man himself, we look forward to June.
No, it's something to be excited about. And when I heard him speak, I felt proud as a Nigerian that, okay, here we are, an indigenous investor who's making this kind of impact. Not just for Nigeria, it's going to impact the sub-region, it's also going to impact the whole continent. So these are some silver lining that we should also be celebrating.
So with this now, how should we celebrate the President Bola Tinubu administration? What rating can you give the administration
well,
1 year?
The thing is that there's a strong context to an assessment of this nature. Because we are talking about an administration that came in at a time when the fiscal space was extremely very bad. We had a situation where the CBN was practically funding the operations of government through the ways and means. We had all manner of issues around our foreign exchange environment. So much so that our reserves were, considerably depleted. We were having all sorts of forwards. We had currency swaps, all manner of things, even borrowed against our reserves. All manner of things just to patch up the situation. But, the way things were going, both from the fiscal side and from the macroeconomic point of view, the economic management trajectory was not sustainable. So that is why I was talking about context. So if you have taken over within that kind of context, your immediate task will be how to fix those fundamentals. So for most part of the first year of this administration, the government was trying to fix those fundamentals.
Is it fixed now? Are they fixed now?
They are largely fixed. The borrowing from the central bank has gone to zero. The amount we are spending on subsidy, although we don't have all the full figure, but we cannot compare it to the time when we are spending almost 80 or 90% of our revenue on subsidy. It was not just subsidy, it was also, funding corruption at that time. So we are beginning to see some space. And we are beginning to see some, respite even around the foreign exchange market. Because the foreign exchange market under the previous administration was very opaque. There was so much corruption, round tripping, and all these man-no-man things were there. But under this current administration, we are beginning to see at least a much more transparent regime. We are beginning to see a much more, narrowing of gap between the official rate and the parallel market. We are not there yet. because we are still not comfortable with the level of volatility in the forex market. But we have made a lot of progress, And in terms of revenue, which we call fiscal consolidation, a lot of progress has also been made. Look at how much revenue all the state government, local government, federal are now getting from FAC. That's a major positive development.
So what would you say the administration should be doing if you say those loopholes have largely been fixed?
Yes.
I guess it should be on building on those successes. What should they be doing at least for the next 1 year? Before this time next year, what should we see?
Well, we should be seeing a lot more stability in our macroeconomic environment, starting with the FX environment. We cannot continue with this volatility. So we should see what we can do within the context or the capacity of our reserves to be able to stabilize the currency within a particular band. That is critical for investors' confidence, it's critical for planning, and it's critical for economic development. Secondly, we should see how we can reduce a lot of our imports. We should make a lot more progress in import substitution. Happily, we're already making progress in the energy space, reducing the importation of petroleum products. If we're able to scale that up, we'll be saving, the pressure on forex will go down by over 30%. That would be great. Then we need to see a lot more stakeholder engagement by all the key agencies of government, because you cannot understand the sector better than those who are operating in the sector. So in order to enrich the quality of government policy, the quality of interventions, that engagement is key to feed into the policy process. So that is also very important. And of course, issue of insecurity. That is also very critical. We need to increase our oil outputs. A lot is happening now trying to curb oil theft, criminality, and all of that.
I hear the NNPCL boss talking about 1.7 million barrels per day. I hope that will be a confirmed number at the end of the month.
I hope so too, and I hope it will be sustainable. Because from what we can see, the government is throwing everything into it to ensure that we scale up our outputs in terms of crude oil production.
All right, Dr. Muda Yusuf, thank you so much for coming through. And you did come when we had the GDP numbers, so just perfect.
Thank you.
Chief Executive Officer, Center for the Promotion of Private Enterprises, thank you so much for your time.
Thank you very much. Thank you.
All right, so take you back to that story again. It's a breaking story in Nigeria. I don't know if we have a history of it. It's about Muhammadu Sanusi II.
To receive the reinstatement letter, reappointment letter, restoration letter. It's a letter that made the history of Kano. The Emir has just received.
All right, so that's it. Muhammadu Sanusi II has been reinstalled as the Emir of Kano. He received his appointment letter from Governor Abba Yusuf at a ceremony at the Kano State Government House. And this comes 4 years after he was dethroned by former Governor of Kano State, Umar Ganduje. Kano State House of Assembly had repealed the state emir's law on Thursday, thereby abolishing the 5 emirates and changes introduced by the law under the former Governor Ganduje. The reinstalled Emir of Kano, Muhammadu Sanusi II, he served as the Governor of Central Bank of Nigeria between 2009 and 2014. He started his banking career as a merchant banker, took a break, joined the United Bank for Africa, and eventually, after being the central bank governor, took a break, went to the traditional scene. That's a major trending story in Nigeria, where you see the law repealed and then a dethroned traditional ruler reinstalled. More stories on that on our political programs and current affairs program right here on Channels Television. But now let's take a break on Business Incorporated. After that, we'll head to the market and other stories awaiting you on the other side of the program. Just stay with us. Welcome back to Watching Business Incorporated right here on Channels Television. We head to the markets now. Doesn't look like we have a lot of good news from the NGX, but Anita has the intraday numbers. Hi, Anita. Good afternoon.
Yes, good afternoon, Amy. Well, of course, Nigeria's stock market, once again, as you can see on your board, it has made a pullback. It's been struggling between 97 and 98,000 points. So, but let's give our viewers around the world more details about Nigeria's stock market. For the close of Thursday's trading session, it was another red, but then intraday, it is still red, continuing from the sell that we saw on Thursday, where we saw the likes of GTCO, the likes of GTCO, Access Bank, as well as Zenith Bank, making offsetting the gains by Seplat and some others. But at the same time, it was also a negative market breadth, where we had about 15 gainers in contrast to 28 losers on the market. But at intraday, we're still seeing that profit taking and maybe like a portfolio shifting by investors, because most of them are moving from the equities market into the fixed income market, where the higher yields are attractive to investors. So you have lots of, on the sides of institutional investors as well as individual investors who are making their investment decisions and at the same time making some profit off the Nigerian stock market. Now for the South African stock market, the JSE, it is also down 0.15%. Almost all the markets across the African region were in the red. But take a look at the other side of the market. We see for Egypt as well as Kenya, they closed on Thursday, all in the red, 0.08% for the EGX 30 and 1.50% pullback. What we saw at intraday yesterday for Kenya's stock market, it was in the green, although on Wednesday it had closed positive, but for yesterday it closed in the red, 1.50% down. And now still with Nigeria's stock market, we're talking about the fixed income market, where we see the bonds market, it was rather quiet. Average yield there was unchanged at about 18.6%, while for the treasury bills market, we saw sentiments in the secondary market being bullish. Average yield there had contracted by about 12 basis points to 22%. Now, still with the fixed income market, we saw the average yield at on the OMO segment, the average yield there, it had declined by 5 basis points to 20.9%. Now, speaking about the open market operations, what we call the OMO, there's an OMO auction being carried out here as we speak. This is coming just 2 days after the DMO and the central bank carried out a treasury bills auction on Wednesday, which was oversubscribed. So now this time, there's still lots of activities going on in the fixed income market, where we see the open market auction still being carried out as we speak. So now to give us more details on that, let's talk to Bosun Obembe, fixed income and forex dealer with Access Bank. Thank you for joining us, Bosun. Hello, Bosun, can you hear me? Please, can you kindly unmute your mic, please? Okay, I think we seem to be having a bit of technical issues with Bosun's connection. So I was talking about the fixed income market. Well, so for the money market, we saw overnight lending rates there expanding by about 169 basis points to 32.23%, and this follows the debits by the authorities there for the net NTB issuance of about 130 billion naira. And at the currencies market, which was just yesterday, because at intraday we're still having the numbers fluctuating for the fixed income and the currencies market, we saw the naira depreciating by 1.6% to 1,485 naira 66 kobo against the dollar at the official Nigeria foreign exchange market, while for the BDC rate, the rate had depreciated on Thursday by about 0.74% to 1,494 naira against the dollar, all the way down from 1,483 naira against the dollar. So that's it for the currencies market. So, but we'll get back to Bosun, but this time let's move over to markets on the Middle East, where we see only the UAE was trading for today, and at intraday, both the Dubai FM as well as the other side of the market were all in the red, and no thanks to activities of profit takers there. For the Tadawul, that's the Saudi Arabia's benchmark market index, it was also in the red, as well as the Qatari stock exchange, where you see here 1.32% pullback on Thursday for the Saudi stock exchange. That's the Tadawul, and then the Qatari stock exchange more than 1% decline for two of the markets, two of the biggest markets within the Middle East. We were talking about the United Arab Emirates, so it is still a negative. This market, ever since the world was greeted with that negative news, which happened on Sunday, where the Iranian president, Ebrahim Raisi, was killed along with some other government officials. So most of that negative sentiment had permeated and dominated the rest of the week, particularly for the United Arab Emirates, and as well as the geopolitical issues or concerns weighing on the Middle Eastern market. So we see most of the week, with today's Friday, so most of the week we've just had maybe just a mild gain from the Middle Eastern market, and this is also coming at the same time where companies are releasing most of the companies are releasing their final first quarter earnings report for that region. So that's why we see some of the markets being in the red as the days go by. So now from the Middle East, let's go over to the US stock market, where we see the stock futures there slightly higher, and this is coming after a day after the Dow has posted its worst session since March last year. But we'll be talking about the US market, but let's go over to the fixed income market, where we were talking about the activities there. If we have Bosun, can you kindly join us if you can?
Can you hear me now?
Yes, Bosun, I can hear you. Great to have you on our show. Okay, now first.
Good to be here.
Okay, now the fixed income market, it has been attracting lots of investors, particularly when you look at the equities market, which has been all the way from 105,000, which we recorded sometime in February this year, to just about some 97,000 and still going down. Now, are we to expect a tightening in the second half of 2024?
I think so, because in as much as the inflation figures keeps going up, I think the CBN will continue to do its mandate of ensuring that there is price stability. And just like you mentioned, today there was an auction today where what CBN has done is to increase the rate. You know, the MPC increased the policy rate by 150 basis points. On the next day, when DMO floated an NTP auction, instead of the rate going up, we saw that the rate actually went down on the longer by 1 basis point. So, but what the CBN has done now is, at this auction today, is to actually increase the stop rate by about 99 basis points to show that, okay, the rate has to actually go up. The yield curve should reflect the policy rate, which is what we've seen currently. So, we saw a lot of interest at the HOMO auction. About over 1 trillion was sold by the CBN, and given that next week there is a fixture maturity that is coming into the season, about $1.3 billion, and CBN is going to pay a lot of settlement credit to people that actually bought the NDF. So about 1.2 trillion settlement credit will go to most of the investors that bought the NDF. So I expect that by next week too, there will be another HOMO auction where CBN will try to mop up this liquidity coming into the system. So yes, there will be tightening as long as the inflation is still going up. Yes.
But so with that expectation of further tightening, I think investors better brace up for many challenges, and then of course where to put their money where their mouth is. But we thank you so much for your analysis on our show, and do hope to see you sometime in subsequent episodes.
Thank you for having me.
That was Bosun Obembe, Forex and fixed income dealer with Access Bank, with details of the fixed income market. And we were talking about the US market, where we said that the futures were in the positive. But Ini, I think we'll just leave it there because time is not on our side. But of course, we always keep our eyes on the numbers of the markets. All right, Anita, thank you so much for that. Now let's head to Berlin, where chocolate, cookies, biscuits seem to be the theme of conversation today. And that's because Lars has decided to bring Mondelez into view. Lars, good afternoon. What's going on with this sweet tooth?
Thanks for having me, Ini. Well, yes, it's a record fine. The EU says Mondelez has to pay €337.5 million, and it's for restricting sales of products within the 27-country bloc. Now, what happened between 2012 and 2019, that is the time frame the investigation covered, Mondelez has been restricting the cross-border trade of chocolate, biscuits, and coffee products within the European Union. That, says the EU's competition commissioner Margrethe Vestager, has harmed consumers who ended up paying more for those items. Now, the products in question are all groceries, And higher food prices are a tremendous problem for consumers. So we're also not talking about a victimless crime here. The EU says that Mondelez has banned wholesale customers from reselling products across borders. For example, a supermarket chain with stores in several EU countries would not have been allowed to buy a large quantity of goods and sell them everywhere at the same price. They were instead forced to ask higher prices in countries where that was part of Mondelez's strategy.
Interesting. Last, let's head to the market now, see what investors are doing.
Well, we got some positive data out for Germany. The German economy has expanded slightly in the first quarter of the year, growing by 0.2%. It's mostly due to stronger activity in construction as well as stronger exports. The economists are expecting another slight uptick for the current quarter, but stronger growth just doesn't seem to be on the horizon for now. So at least we're out of the recession that we saw last year. And now one weakness is still consumer spending, but that's also, of course, where things could improve. Given higher wages, economists are hoping that people will start spending more, and that could contribute a bit to future growth, of course.
All right, Lars, thank you so much for reporting all through the week. We'll do it again next week. Now let's head over to Paris, where there's that Viva Tech conference going on. And we do have some Nigerians participating. One of them is the Chief Executive Officer of Cassava Insurance, Mr. Bode Pedro, joins us from Paris now to share his experience and why he has taken out time to go to that. Mr. Pedro, good afternoon. Great. So how's it been? The conference ends tomorrow. I think it's been on for like 2-3 days now. What has been your experience? What are the conversations going on right there at the tech conference?
It's been immense. 150,000 people from all over the world have been invited and, really adding value in the conference. For me specifically, it's all about artificial intelligence. But as a Nigerian representative and a representative of Cassava, what we notice is that AI and data in general is a huge part of this conference. And I was more particularly interested in how AI can really impact some industries in Nigeria, like agriculture, insurance, fraud, and banking and other industries. But specifically Cassava, because we're growing at a rapid rate, we have millions of customers that have insurance, but most importantly, we're empowering agents, insurance agents, using artificial intelligence so that they can sell insurance at scale in Nigeria.
Sometimes when we hear of this, Nigerians attending tech conferences talking about artificial intelligence, sometimes it does feel like it doesn't fit into the realities back home. When you're done, you come back here and then you search or try to get electricity supply to even run your household and then your company, And so when you talk about artificial intelligence, it seems far-fetched that do we do this or have these conversations because the world is having it, or do we do it because we really mean it and we are implementing it?
Quite the contrary. You have to understand that these industries are not in a silo. The services that need to be provided for these industries to actually thrive require efficiency. So when we talk about agriculture, how do farmers learn? How do other ecosystem players support agriculture? We talk about insurance. We don't have insurance penetration that we need to have. How do these insurance agents, how can we give them the tools so that they can sell insurance? And how do we sell the right kinds of products actively in the market itself? We talk about healthcare. Healthcare needs to be digitized. I'm very, very excited that I have been part of the Nigerian Digital Health Initiative that was visioned by the president of Nigeria to digitize healthcare so that eventually healthcare in Nigeria will be ubiquitous and available to everyone. But we're going to need efficiency, and you can only get efficiency through its automation, and especially artificial intelligence. So best believe AI is going to be a part of these industries that would enable job creation, wealth creation, safety and security in our markets.
Now, Mr. Pedro, you are in the insurance sector, and here in Nigeria, I can't remember the number now, but insurance penetration is really low. Nigerians typically do not trust insurance companies to deliver when the need arises. Are you saying that with the adoption of AI, these sentiments will change?
It's not just the adoption of AI. First of all, policy. We now have a new team at NICOM, fantastic professionals from the Commissioner for Insurance, as well as the Deputy Commissioners for Insurance, and their mandate is very clear. We need to scale out insurance, and we need to create value in insurance. Now, supported by tech investment, both locally and globally, as well as international trade, there's a massive opportunity to change insurance in Nigeria. And we've seen this in banking. People forget that 20 years ago, we didn't have pensions. Now we have pensions. 25 years ago, most people didn't have bank accounts. Now we do. I believe that this is the age of insurance. This is the right time because investments are actually being made in insurance. We have tech companies in insurance, and we have the right team, regulatory team, that are going to push policy for insurance penetration. I think that there's a huge opportunity, and I think the encouragement is to push for investment in this industry.
Okay, great. Well, so what are you bringing back home to Nigeria?
First things first, I am bringing back news. The world is watching Nigeria. They're very, very excited and interested in Nigeria's progress. Nigeria, as we know, is giant of Africa, so other African countries are actually very interested. And what I would say, more than anything, is that for next year, we need to be represented more at VivaTech. VivaTech is the largest electronics technology conference in the world. Nigeria needs to be felt. And so part of what I'm bringing back is encouragement for our ecosystem, from government to our tech companies to media, to be part of this conversation so that we can actually be part of this global trade and benefit our community. So I'm really looking forward to as we go forward.
All right, Mr. Pedro, when you come back, we'll catch you and see if you have all of those things and get our own share of it. But thank you so much for your time this afternoon. Mr. Bode Pedro is the Chief Executive Officer of Cassava Insurance and is right there in Paris.
Thank you.
All right, now we move to Zimbabwe, where the International Monetary Fund has commended Zimbabwe's recent adoption of a new gold-backed currency, ZiG. We've been talking about it. They're viewing it as a positive development. This marks the IMF's first substantive commentary on the ZiG since its introduction last month. A spokesperson for the IMF headquartered in Washington acknowledged the significance of Zimbabwe's policy shift, which includes various complementary measures in monetary, exchange rate, and fiscal policies. ZiG is an abbreviation for Zimbabwe Gold, was officially introduced on April the 5th, marking the nation's sixth endeavor in the past 15 years to establish a viable currency following previous failures because of hyperinflation and currency devaluation. In an attempt to avoid past pitfalls, the central bank has committed to refraining from printing additional ZiG currency unless adequately backed by reserves. Moreover, it has explicitly stated in its intention not to finance government expenditure by printing money, a practice that undermined previous currency attempts and led to predominance of US dollar transactions in the country. Kenya's MSMEs had the highest number of layoffs, temporarily halting of work and salary reduction for employees in the last 2 years. That's among key economies in sub-Saharan Africa. This is according to a survey by global firm Geopol conducted in Ethiopia. Nigeria, Kenya, and South Africa take the lead in that layoffs. The Africa MSME Pulse Survey 2024 indicates a troubling trend of workforce reductions, with 40% of respondents indicating that they had to lay off staff in the past 2 years as a way of staying afloat in a tough operating environment. And Kenya had the highest number of this, indicating that they laid off or opted to cut salaries at 52.56%, followed by Nigeria at 47%. Ethiopia and South Africa had lower incidences of layoffs at 37.96% and 33.33%, respectively. Let's head to the crypto space now and see what the numbers there are looking like. It's a red Friday. I'll say different shades of red. That's what we see there. But the price of Bitcoin is not looking so bad, even though it was better yesterday at 69,000. Today it's 67 after it dropped 3.3% in the last couple of hours. We look at Ethereum and we see it's also red. Solana is red. Another shade of red. Ethereum is 3,692. Cardano is red. Avex is red. You know, just the little ones have been able to escape it. But let's look at the headlines and see what's in the news at this time. I think one of the biggest stories is that SEC, obviously in the United States, Securities and Exchange Commission has approved 8 spot Ethereum ETF in the United States. They gave the green light to 8 physical Ethereum ETF despite opposition to related products from GBTC. This decision would be crucial, a crucial step in the currency market for the approval for the first place of Bitcoin ETFs. We'll delve more on that with our guest, hopefully. Then other than that, we have Solana. The Solana community, they are divided on the proposal to remove 50% priority fee burn and fully reward validators. That's the next one. While the Solana is mulling this, the community is divided. I wonder where it will end, where the pendulum will end. And of course, we see Bitcoin price flashes $1.2 billion. Signal. Let's have Olumide now, Adesina, join us to share some of his thoughts on some of these issues. Hi, Olumide, good afternoon.
Yeah, good afternoon. Thanks for having me.
Good to have you. So this Securities and Exchange Commission on 8 physical Ethereum ETFs, and this is in the face of opposition, you know, when it comes to other related products. Do we know why they seem to be positively aligned with the Ethereum ETF?
So thanks for having me once again. If you look at the market condition right now, you could see that the chart is fairly pink, or what we say red. And that's because the kind of approval we saw yesterday was not really the approval the whole market was expecting. So first of all, what we saw yesterday was a 19B4 approval, which practically gave these funds to list on those exchanges. But what really makes the difference is the S1. The S1 approval is where institutional investors can really tap in, or where trading can really begin. And you know, one of the reasons why that really matters a lot is that it will give Ethereum the ammunition to be classified as a commodity, and also influx of traditional investment from these giants. And another concern is that, you know, despite the approval we saw yesterday, we didn't see Gareth Gensler and popular commissioners taking the vote. So prior to the rules, it means that some of these commissioners can protest. So the tactical approval we saw yesterday could still go under strong review. And lastly, the time for that to take place is not in the books. So you saw Bitcoin from 3,900 plus going at some point to about 3,005 before now oscillating around the 3,700 level. And you look at what happened in the market yesterday. Apart from Nvidia, risky assets suffered heavy downturn, and that's pretty much on geopolitical and the appetite for living currency. So I think we're seeing profit taking, and also the fact reality that this is not the Bitcoin spot ETF that a lot of people got used to. So that's why we've not seen Ethereum breaking above the 4,000 resistance level as we speak.
Yeah, but I mean, still talking about this Ethereum ETF, there seems to be a lot of, you know, talks behind. Some people say that perhaps there's a political influence to this that's making them that there was no prior approval by the Securities and Exchange, and now we see it going through like this. The story about Trump, you know, being involved, getting donations through Bitcoin, does this have a political touch from your perspective?
Definitely it does, but if you look at the narrative playing right now, one of the reasons why Ethereum is really going through those scrutiny is that
All right, we'll see as how it goes, as you said. Olumide Additional, thank you so much for your views.
Thank you for having me.
So that's it on the program. Thank you so much for being a part of Business Incorporated. A whole week, very eventful. GDP came out, MPC, and all of that. If you missed any of them, you can go to our YouTube channel, www.youtube.com/channelsweb. I think that's the most important part, channels web. And then you see our videos, and you can watch Business Morning, Business Incorporated, anytime you want. Ladi will be here 7 p.m. Saturday, a summary of what has happened in the market all through this week. I'll see you later tonight for the stock market report, and then I'll see you on Monday. Have a great weekend.